Hello, I'm John LaRosa, President of Marketdata Enterprises, a Tampa market research and consulting firm. Welcome to Marketdata's Weight Loss Market Teleseminar. I hope you get a lot of value out of this teleseminar. It's one of many that I'll be doing on a variety of weight loss market topics. We cover more topics about the weight loss market than anyone. And after looking at the PowerPoint presentation that will follow, you're welcome to email me or contact me by phone with any of your questions about any of the material. So why, as Marketdata and myself, why are we experts in the weight loss market? Well, for a variety of reasons. First of all, there is no trade association representing the industry on a national basis. It's really unbelievable that a $60 billion industry that's so huge and so vast and has so many different segments to it doesn't have a trade association. Just about every other business in the country has a trade association representing them, but not the weight loss market. In addition, it doesn't have a magazine or a trade journal regularly covering developments in this market. So we and other market research firms are some of the only sources of objective, unbiased analysis about weight loss companies and the market. Also, Marketdata has tracked this market longer than anyone. We were the first ones to quantify the size of the market in 1989. We've been tracking it every day for 25 years since then. I personally have researched and authored more than 50 market research studies about various segments of the market. 50 in-depth market studies. Plus, we cover all 10 segments of the market, not just a few, not just diet drugs or diet products, but all 10 segments. No other firms do that. We have contacts with former employees that used to work for weight loss companies that now can share information that they couldn't share when they were employed by those companies. We speak to franchisees and former franchise owners. We speak to reporters, writers, Wall Street stock analysts, MDs, physicians, startups, entrepreneurs. This is my passion. This is almost like a hobby to me. It doesn't even feel like work. It's a fascinating, dynamic market filled with entrepreneurs and small companies that are privately owned and lots of innovative entrepreneurs out there with new ideas. So it's never boring. We're unbiased. We don't run a diet program or a diet company ourselves, so we can tell it like it is. We have, we believe, more accurate forecasts than anyone else because we have more sources than anyone else, and we have more historical data going back 15 to 20 years. You can't look at this market just based on a 3 or 5 year trend. History tends to repeat itself. And we've looked at the market through recessions, expansions, bad weather, snowstorms, wars, consumer fads, fad diets, consumer shifting preferences, and much more. So for those reasons, I can confidently say that no other company or analyst in the US or on the planet knows more about the US weight loss market than Marketdata. With that said, let's get started. As you know, the weight loss industry is huge in America. It's a $60 billion market, and there are a variety of ways to invest in the market, one of which is investing in weight loss company stocks. However, there's really only 5 publicly owned weight loss companies that you can invest in directly whose main business is weight loss. And when you read the equity research reports or you listen to the conference calls 4 times a year, 5 times a year when the company reports their earnings, you have to remember where these analysts are coming from. You have to take their questions and their opinions on things with a grain of salt. Why? I'll explain why. I've been looking at the market for 25 years. I've written 50 in-depth industry studies about the weight loss market. We track all 10 segments of the market, not just a few, not just diet drugs, not just the commercial programs, all of the segments comprising the weight loss market, and we know how they interact with each other, and we know what factors affect the market. So, what companies can you invest in? You have Weight Watchers, symbol WTW, which is the leader with $1.7 billion in sales last year. You have Medifast with $356 million. Herbalife, a multi-level marketing company whose main products are weight management products, worth $717 million, the number 2 weight loss company in the US. A lot of people don't realize that. And Nutrisystem with $356 million, about the same size as Medifast. Jenny Craig, of course, is now private. It was acquired by North Castle Equity Partners, a private equity firm that bought the company from Nestle, and their sales have recently been estimated at about $300 million. So those are the 4 main companies you can buy stock in. Then you have a couple of other companies which I call pseudo weight loss companies, where weight loss products represent a significant portion of sales, but it's not their primary activity. You have Pharmanex, which is part of New Skin International, another multi-level marketing company. You have Visalis, which has been growing very strongly in recent years, a division of the Blythe Corporation, also MLM. You have ediets.com, which used to be the premier diet website on the internet. Now it's part of a company called As Seen on TV, based in Clearwater, Florida, which acquired the assets of eDiets. And then you have another multi-level marketing company, USANA Health Sciences. So these are all public companies that you can also invest in with a significant share of their revenues related to weight loss, but not the primary. Okay, some of my criticisms about stock analysts in particular related to the weight loss market. I believe that they're very narrow-minded. They have mostly a focus on the financials. They are not trained in marketing. They have very little knowledge of marketing and consumer demand and market dynamics and diet fads and trends. And I like to be cynical and say that EBITDA is their mantra. EBITDA stands for earnings before income, depreciation, taxes, and amortization. It's the net profit. It's the profitability of a company. They focus on that and cost controls and all the financials. Their focus is also very short term. It's what's happening this quarter. How did the company perform this quarter? And a lot of times they're not looking at a year or 2 years down the pike. They're just looking at the short-term results. They don't ask the right questions in these conference calls, and many of them have not followed this market very long. They move from industry to industry, and so you may have an analyst of the weight loss market that's just started to cover Weight Watchers or Nutrisystem 3 months or 6 months ago, and as a result, they haven't been around through recessions and wars and bad weather in the winter with snowstorms that affect attendance at diet centers and other services. and they don't know uh, what's happened to this market 10, 15 years ago and about history repeating itself. Stock analysts are again, they're looking at the financials, and the profits of a company are the result of executing things well. The marketing and sales and how well they execute and uh, and 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 provide valuable services for the consumer, that drives what falls to the bottom line. First you have sales, and then you have all the cost of providing that service or product to the customer and getting it to them and getting them it to them in the right way with good customer service and satisfying the customer. And what's left after all those expenses are the profits, not vice versa. Marketing in the weight loss market drives the top line. It drives sales and trickles down to the bottom line. So cost controls, yes, they're important, but it's not everything. Marketing is a lot more important, much more important than cost controls. The most valuable assets for a diet company are its people, the weight loss counselors, and the management, not the physical facilities. So in this market, you need to look at the long term and the entry into new markets and finding untapped markets and pilot testing and what companies are going to do to innovate. That's key in the diet market. So for that reason, the lack of marketing expertise by these Wall Street analysts, we feel that a lot of these quarterly conference calls are really a missed opportunity for these analysts. What are these analysts afraid of? Why don't they ask the tough questions and put management under the gun? Why don't they ask them about what the competition is doing? When you listen to a conference call and it's about Weight Watchers and they're grilling management about this and that, why don't they ask them what's happening at Jenny Craig, their new program or their new ad campaign with Kirstie Alley? What about Nutrisystem and them getting into more Walmart stores and test marketing their services in Target stores, and CVS and some of the drugstore chains now offering weight loss services? What are they afraid of? Why don't they ask about what the competition is doing and what effect that has had on Weight Watchers or any other company? Why don't they ask about new growth markets for the company and what untapped niches are they going after? Why don't they get the management to admit their faults? Because they're trained in finance, tunnel vision. Look at the cost controls, look at the capital expenditures, look at the SG&A, the general and administrative expenses. What about the how much their salaries were increasing? That's what they're focusing on. But this market is not driven by finance, it's driven by marketing and advertising. Okay, when you listen to some of these conference calls, you have to understand some of the lingo. They like to throw around these terms and make them seem more important than they are. They use EBITDA. I mentioned what that means. That's basically profitability. CapEx, capital expenditures. When they talk about analysis of their operations, they talk about getting granular. Okay, that just means more detailed, or give me a deeper analysis. Can you give us some more color on that, on what your ad campaign was all about? That just means give us a little more detail. So see, these are some of the buzzwords, so don't let them intimidate you. What are some of the best criteria by which to evaluate a diet company? Well, in this field, like they say in real estate, it's location, location, location. In the diet market, it's management, management, management. How good is the company's management? Do they execute their plans? Are they exploring new niche markets? Are they receptive to what the consumer is looking for and shifts in consumer attitude and preferences? Are they managing their franchises or their company-owned centers well? That's key. Their long-term reputation. Have they avoided public relations disasters? I'll give you a few examples. Jenny Craig once hired Monica Lewinsky as their ad spokesperson. Bad choice. I don't know what the advertising agency was thinking when they came up with that. And currently with Kirstie Alley. Kirstie Alley was hired in 2007 for their ad campaign. She gained back all the weight that she lost after leaving Jenny Craig. She started to, she launched her own company called Organic Liaison. She was difficult to deal with. So what does Jenny Craig do now? In 2014, they hire her back. Duh. I mean, come on. So long-term brand reputation, how well the brand is known, what it stands for, avoiding public relations disasters and slip-ups, that's important. Another criteria to evaluate a dye company is how well they execute their marketing and operational plans. The quality of their counselors or coaches, that's key, because these are the people that see the customers on a day-to-day basis. These are the ones that motivate the customers to come back week after week, month after month, to stay on the program, continue buying the dye company food, sticking with the program, and contributing to ongoing revenues. So the diet coaches, they must be competent, they must be good, they must establish rapport, be personable, not be just aggressive sales reps. They have to have the whole package. Does the company have multiple channels of distribution? Well, Nutrisystem is a good example of a company that does have multiple channels. They have the QVC channel on cable TV. They sell an introduction to their program through Costco. They're in 4,000 Walmart stores. Now they're testing in Target stores. They have their website. They have their direct-to-consumer advertising on TV. Multiple channels of distribution. Very important. The size of their advertising budget, their war chest, if you will, that's going to be key too, because a dye company has to spend usually about 20% of their sales on advertising and marketing. Otherwise, you're not going to get recognized and stand out from the crowd. There's so many competitors out there. When you add the hundreds of thousands of multi-level marketing distributors, the internet-based programs, the infomercials, the mail order supplements, the medical and commercial diet chains out there, you just have so much competition now. You need a substantial marketing budget to stand out and get into the customer's head. So obviously a company like Weight Watchers that has a $300 million a year ad budget and marketing budget, and Nutrisystem with a $100 million marketing budget has a definite advantage. They have more clout than a $50 million company that has a $5 million ad budget. Another criteria to evaluate a dye company by is the price and affordability and ease of use of their program. That speaks for itself. And finally, their response to customer actions and shifts in diet or preferences. How quickly can they get new programs and new services to the market? Does it take them years or does it take them months? In this dynamic market where you have a lot of new startups and entrepreneurs and tremendous competition. It's very important to get new products out on a regular basis and get them out fairly quickly. Not that you're not going to do any testing at all. You're going to do focus groups and you get feedback, but don't overanalyze and get into analysis paralysis. The diet market is not rocket science. Advertising drives demand in this market. It's not a technology business, although they do have websites, and now we're getting into things like apps for the iPhone and tablets, and people are putting more emphasis on that. They're beefing up their technology, but it's basically not a high-tech business. This is a service business. The quality of the diet food, whether you're Jenny Craig or Nutrisystem selling diet food, it has to taste good. It has to be palatable for people to come back and buy your food and stick with it for 3, 4, 5, 6 months. Does the program work? Are you losing weight? Is it effective? Can you see significant weight loss in those first few weeks, which are key to keeping a person on a diet program? Clients want a company that's also going to be there tomorrow. They're not looking for the fly-by-night company. They've seen enough of that. They've seen all the frauds and scams. Yes, they will try something new, a magic pill or potion or supplement for 30, 40 bucks. They'll say, oh, what am I going to lose? If it doesn't work, I'm only out 30 or 40 bucks. The market is moving more toward retail and more toward medical. You do see more retailers like Walmart and possibly Target and CVS and Rite Aid getting into weight loss. And there is strong growth in counseling services by doctors and physician's assistants and nurse practitioners and OBGYNs and medical weight loss programs. Small to mid-sized medical chains are doing fairly well. Unfortunately, there aren't any public companies in that medical area to invest in, but who knows? In the next couple of years, we may see some of them go public. Prospects for growth. Is this a Me Too company where they're copying everybody else's weight loss program, or do they have something innovative? And finally, is the company tapping underserved niche markets? That's something that you should ask yourself before investing in a diet company. What are some of the best times to buy diet company stocks? Well, a good time is when the overall market is depressed due to political events, what's going on in the Ukraine or the Middle East or with oil, and the whole market is down 200-300 points for the day. That's a good time to buy a quality diet company because the stock price is being depressed not because there's something wrong with that diet company or the diet market, but the overall market has come down and it's a sale, it's a buying opportunity. Another good time may be when you have a quality diet company whose outlook is strong for the year, but they just have one bad quarter. Maybe they didn't do so well with their ad campaign, or they didn't execute so well, or weather was bad in January, February, and March. We had a lot of snowstorms that affected the attendance at weight loss centers. Okay, that's an event that's going to pass. It's a one-time thing. They'll get over it. Again, I mentioned external political events like wars that depress the stock market overall that have nothing to do with the domestic weight loss industry. That's a good time to buy. Bad weather, again, a non-recurring event that doesn't affect the basic business of the company. When to sell a diet company stock? Well, a good time to have sold Weight Watchers was when the stock price was near its all-time high at about $80 about a year ago. Obviously, hindsight is 20/20, but when you're looking at an all-time high for the price, may be a good time to take some chips off the table. If you have a mass exodus of top management or key personnel or weight loss counselors, like happened with eDiet, eDiets.com in the last 3 to 5 years, when the CEO was replaced and a lot of the top management and marketing people left the company. That may be a warning sign on when to sell. When the diet program is not in tune with what dieters are looking for, if the program is not convenient, if it becomes too costly, too complicated, that may be a good time to sell. And also if there's any kind of a public relations faux pas, disaster, something bad, side effects related to the company's products, that's the time to sell. Things that derail a diet company. Customers don't like aggressive sales tactics, high pressure to join and get into a year-long program, a lot of money up front, a company where most of the counselors make most of their money and pay from commissions on selling high-priced supplements or long-term programs. These are things that consumers don't like today. Another thing that will derail a diet company is not spending enough on advertising and marketing. They're going to get lost in the clutter. Deceptive advertising, promising miracle results. That's eventually going to draw the attention of the Federal Trade Commission, which may result in fines and actions and diet companies' products being taken off the market, perhaps, getting slapped on the wrist with a fine. And the fine could be substantial. It could be 10, 25 million in some cases. The FTC has been very aggressive the last couple of years. Another thing that could derail a diet company and its stock are pushing overpriced dietary supplements. It could be poor street exposure. This is somewhat true of Weight Watchers. A lot of their 4,000 or so meeting sites are in schools and synagogues and community centers and company work sites. They do have 800 leased retail sites and small strip malls, but you'd be hard pressed in a lot of cities to actually find a Weight Watchers weight loss center or a Jenny Craig center. Even though Jenny Craig has 600 locations and Weight Watchers has 800 centers, a lot of times they're not easy to find. You have to go online to their website and punch in your zip code to find the nearest center. So hopefully they'll address that issue in the future, but that's something that needs work. So that's just a few of my thoughts on stock analysts related to the weight loss market and some of their shortcomings and why it's important to do your own research and look at other research and reports like Marketdata and other companies, and not just focus so much on the financials, but focus on the marketing and the competition and how well they're reaching niche markets and looking at new markets and how fast they're getting programs and services out to these markets, and whether their program is flexible and easy to use and affordably priced. These are all just as important or more important than the financials. The financials are the result of the sales and marketing efforts. So remember that. Marketdata reports, as you can see, are used by a wide variety of people and organizations, and we have the greatest variety and greatest number of reports, market research studies about the weight loss market than anyone. We've been tracking it since 1989 for 25 years. We do teleconferences, custom research, consulting, and this is our specialty. You will find no one else on the planet that has more information and better and more accurate information than Marketdata. If you want to get in touch with us, here's our contact information. I'll be doing many more teleseminars related to the weight loss and other markets, and you can always reach me by email or by phone. I hope you've gained some knowledge about investing in weight loss stocks, and this has helped you in your investment opportunities and activities. So we wish you good luck and look forward to seeing you in our next teleseminar. Thank you.